All right, so this is my April 8th weekly forecast. Overall, what I've noticed is prices breaking structure on smaller time frames with a re and it's making a retracement on larger time frames. If I go to the line chart, price has broken structure to the upside here on the 15-minute, but if you go on the hour or on a larger time frame like the daily, even price is just a mere apologize for this, but oh, I guess it's difficult to see with all the text, but price is just this is just a small retracement. So overall, price may be breaking structure on the 15-minute, but overall, I still do believe that it'll continue to go down. See here you can see a clear break of structure, but it's really just a retracement because of how powerful this downtrend has been. So I'm still looking for shorts, even though that this is has broken structure to the upside. I'm still I'm making some small strategy adjustments ever since I lost the trade a few days ago on the 3rd. First of all, I'm going to stop using accumulation as a core confluence, and I'm only using it as an indicator of daily bias and where price might head to because I don't exactly have a great understanding of what accumulation exactly is. What I do know is it's an area like this which has multiple order blocks where price retraces back to, but on a more macro time frame than order blocks, which is just one or it's just one peak, and then accumulation is like a macro version of an order block. That's what I know for sure, but I'm still not very good at using it, so I likely will not be using it very often or at all currently. I'm back to using some of my old confluences like equilibrium here, and I may use fair value gaps occasionally for extra confluence, although I'm still not going to include fair value gaps as a major confluence of mine. I believe, going to specialize in liquidity sweeps and order blocks for my primary confluences and I'm still, and so that's why my primary focus is still going to stay on those, even though I'm shifting from accumulation to the more technical things that I learned early on. So that's where I'm at currently. I made four backtesting trades using my refined strategy and a live trade that seems to follow the same pattern as these four backtested trades. The first um, the first back-tested trade I could have taken was on a bullish retracement off of a downtrend. As you can see here, we're on a downtrend. We see a retracement back up. And then what I would have done is I would have marked out this area of accumulation or this order block here where price retraces back up. It retraces up here, pushes even further, and this is the top of the retracement. So I would have marked out this order block. I suppose I also could have marked out this whole area as an order block, but more specifically, I wanted to lock in on this one. And eventually, price retraces back into this order block. And once it does, it breaks structure to the downside. And I would just have to scroll on a smaller time frame. I'll do the 5 minute, for example. I would just have to go on a smaller time frame, and then once I get the break of structure down, I would take an entry off of it. I believe it breaks structure on this candle, maybe like right here. And then that would have been my short. I would have placed stop loss above this high, and I would have put my take profit at this swing low. That would have been a 1 to 1.2 risk to reward ratio, and it would have hit. The one thing I would do is I may do 1% risk, but because this equilibrium here, it's hard to define exactly where it is, whether it's here or here or here. And sometimes I feel like I just put it wherever it works instead of trying to figure out when the market works with equilibrium. I just try to shove my strategy into whatever's there. So that's why, because the equilibrium is slightly shady, I would have only done a 0.5 to 1% risk. For the second trade, This one was also taken off of a bullish retracement, except this one's on a slightly larger time frame where price pushes past this order block, it makes this high, it retraces back in, and then it breaks above here. And so when it retraces back into this one, it comes down and then it goes out of the first one, retraces back into the first one. So this sort of echoes support resistance trading a little bit because what I'm doing is I'm retracing from level one to two to one back into one, and then as long as this one is respected, as long as level one's order block is respected, I'm still willing to take a trade off of it. I would take a trade as soon as price breaks structure here and it closes below the low. Similar take profit and stop losses before for 2.3 risk to reward. And due to the lack of clear equilibrium and the support and resistance type order blocks, I would only do a 0.5% risk. All right, so for the third back-tested trade of the day, we found something very similar, which was a bullish retracement on a bearish trend. Price pushed past three order blocks this time, and what we found is after price retraced into order block three, it broke structure to the downside. And so off of that break of structure is where I would enter off of because although it pushes past this one, it respects level three, it retraces into it, breaks structure to the downside. We see the break of structure right here when it closes below this low. And then at that point, we would just put the stop loss above here and take profit below here, and that would have hit for a 2.1 risk to reward ratio trade. This would have been a 0.5% risk trade because it's below equilibrium, and this is a little bit support and resistance territory, and that's not exactly my specialty. Fourth trade is extremely similar, which is another retracement off of, or another bullish retracement off of bearish retracement. Price re goes down into order blocks and price retraces into order blocks and breaks structure. The good news is this is within equilibrium. So again, what I would do here is I would put my stop loss above here, take profit down here, and although I would spend a lot of time in the red, I would eventually hit take profit and much further than that actually. So overall, these four trades have led me to my live trade confluence. This seems to be another reoccurring theme where price is on a bullish retracement on a bearish trend. We're seeing price break structure to the upside on the 15-minute during a bearish retrace on a bullish retracement. So what we're looking for is we're not looking for a daily buy that shouldn't be there. We're looking for a sell or a short. So what we're going to do is first of all, I'm going to take this either before or after Wednesday because there is CPI on Wednesday, high impact news. What I would do is I'm waiting for price to exit and re-enter this order block I've marked out right here, which is also within equilibrium. Then once I get a break of structure to the downside, I'll set my take profit above here and stop loss down here for a 3 point, almost 3.5 to 1 risk to reward ratio trade. And because this sort of uses a newer strategy or things I'm not entirely used to, I'll only risk 0.5%. So that has been my weekly forecast. I believe this trade, I do have confidence in this trade because of the recurring theme I've seen in the previous four trades. So I definitely think that refining my strategy and looking at patterns from the past is going to help me. Ideally, this trade will hit take profit.